The S&P 500 daily cloud chart shows the lagging line 26 bars back that reflects the current price close has fallen back under the bottom of the cloud 26 bars back, and the bottom of the cloud will be at that level for a few more days and then takes a tick up and continues going up. And if price decides to turn around and head north again, there's really nothing in this area except for the pivot point 4354.58, and that's a moving target. And then the trend factor down 2 is still valid at 4351. And a bullet was dodged on Friday because trend factor disqualified down 2, which was qualified on Friday, did not become confirmed. There was a down close followed by an up close followed by a down close below the level in question, the trend factor down 2. Then price would have needed to open below this close from the 12th on the 13th, and it did not do that, so that ended that right then and there. So I had a pretty good uptick and then just fell off the face of the earth. So this tells me that price wants to go up in the S&P 500, but forces are bringing it down. So I still say that there's more upside, but we could have a little bit more pain first. And the relative retracement up 1 is still there at 4365.67, so resistance for sure above that 3555 line for the bottom of the cloud 26 bars back. And worst case scenario in the short term, going back to visit this is not out of the realm of possibility, and there's plenty of support there. All those other levels we looked at are still there, and the 200 moving average simple is there at 4221.06. So the moving averages closest to price is this 20 simple moving average 4325.97, and then the 21 EMA in solid blue also is right above it at 4343.20. So it's right in between those two moving averages. And the conversion line is there underneath it at 4301.15. And right under the cloud conversion line and current price is the sequential disqualified buy risk, 4290.16, should offer support. The Shanghai momentum indicator ticked back down into the negative section slightly, negative 2.62. The fast ATM trigger down is more of a pronounced rollover. However, the slow trigger up, hence the name slow, is still pointed up and to the right for now. And pressure up is still down here at negative 2.0. And 2 or 3 more days like this of lower highs, and the zigzag indicator will anchor itself at this D wave, down wave 4, where it printed here, and we'll have a swing point to the downside, and I can't emphasize enough that will be a strong indication that we're on the D wave down. And it's now on the D wave down wave 5, and that will print on a tick lower than this low, 4216.45, and the D wave down wave 5 will print and can keep traveling. And to close above either one of these ongoing supply lines, and then they become qualified. Same thing with these demand lines, closes below those and they become qualified. The ARC 3.618 level is near the 42.40 area, so a lot of support down here still, and that demand line. And the price flip to the buy setup count 1 happened on the close for Friday, and that caused the sell setup count 5 to be negated, so it was more than halfway to printing the sell setup 9 end count, so that didn't happen. And the price flip back to the sell setup count 1 will happen on a close higher than this close from the 10th, 43.58.24. If it doesn't, it prints the 2, then the next day it could print the 3, then the 4, then the 5. That's if it keeps moving down. And the fast QQE did not make it past 50, so that's not a good sign. And it looks like it's got a slight indication of rolling over and going back for getting under the slow QQE here, so that needs to get above 50 and keep moving up. Then we know we're pointed in the right direction, but not this time. And for now, the Stark bands, both lower here and upper here, are pointed up, so we give it the benefit of the doubt until these become pronounced rollovers to the downside, and then that's a for sure indication that there's big trouble. And the channel 3 low is here at 42.46.88, right underneath that Stark band, lower band. Bollinger Band, lower band is down there quite a ways, 4170.88. So if you've been following along, we lightened up here when it went above the cloud. I did not lighten up enough though. I was getting greedy and waiting for the 4400 level to get broken to the upside and get near 44.38, the baseline 26 bars back concerning the lagging line here. So I got caught with my pants down a little bit, but at least I did jettison some. And that Bollinger Band mid-band here is at 4300.10, and that's right on top of the conversion line for current price. So if price can break through those two levels in a decisive manner to the downside, it's a given for sure that we're headed back to this area down here. And REI gave us the low risk up arrow and then promptly gave us the low risk down arrow, and that doesn't happen too often, so I would take this really seriously, but keep an eye on things as that the marker 1 is still up there. The only thing I'm concerned about now is the rock has rolled over and the DMI plus has gone under the DMI minus, so that's not good. It looked like we had a chance to head up to the upside, but it went back under here, so that reflects the QQE fast, and it could be an indication that the QQE fast is going to go back under its slow QQE. So that one's the one to watch, the fast QQE going under the slow QQE or avoiding it and heading back up.